Welcome back. The Nifty is teasing us. We came within striking distance and now it's shied away a bit. But the big moment will come anytime soon. Let's concentrate on the ambience, the export sector. India's goods exports actually have been falling in every single month of 2023. Most of the big individual contributors like engineering goods, textiles, gems and jewelry, chemicals, petroleum products have also been falling between 5 and 25%, as you can see. Electronics exports have been a brilliant exception, but they are still only about 5% of our total goods exports basket to make a difference. How is the road ahead for Indian exports in the current year, particularly for textiles, on which the domestic economy depends a lot? I have two experts, Ajay Sahai, Director General of the Federation of Indian Export Organizations, FIO, and Dipali Goenka of Welspun, one of the most prominent textile exporters out of India. Dipali and Mr. Sahai, good morning and thank you very much for joining us. Mr. Sahai, first for the big picture. Is this export fall only due to price falls? Because a year ago, many things were more expensive. Or is there a volume drop also in our exports?
So in fact, if I evaluate the data of the ports data clearly shows that their handling of exports and imports volume has gone up. So I will attribute it more to the drop in the prices, because we just did an analysis, quick analysis of the drop in the month of May, which was around 10%. Out of that, the drop in crude prices, which was reflected in the petroleum exports, alone pulled down the overall export figure by 6%. So I think it's more on account of the drop in the prices. Maybe in the individual segment, we may have seen some drop in the quantity, but when I'm looking into the port data and the airport data of the volume handled, I think on the volume side, we are perfectly okay.
Okay. No, that explanation fits definitely for petroleum. But like a table that just ran, we are doing less even in terms of engineering exports. That's down about 9-10%, 6% Jan to May. Textiles is down 20%, gems and jewelry 20 to 25%, and inorganic chemicals down about 12%. So it looks like it's run across and maybe beyond price. But I'll come back to you on that. Dipali, what are your thoughts? Your own numbers in the fourth quarter were fairly good. But are you sensing destination countries exporting less?
So I think, Lata, to that extent, I'll tell you, India lost a couple of points, if you look at your textile data last year, mainly to Pakistan, in towels and sheets. And it was owing to cotton prices, commodity, and the freight costs. But this time in quarter four, we gained phenomenally by, to 7.5% in towels and 3.5% in sheets. And we see that coming back, Lata. I think the commodity prices have sort of stable down, and the freight costs, which went up 80% year on year, now, it's come down tremendously. I think we'll see that kind of a ripple effect coming in. And because, there was a freight disruption that happened at the front end and the point of sales of the retailers, there was a glut of inventory. And that inventory now sort of is stabilizing. And the quarter one is that stabilizing factor, as the retailers will take offtake of inventory from India for preparation of the holiday season. That happens in their quarter four and our quarter three as well.
Okay. Have you already heard from any of the, purchasing organizations? Do you think that in the second half of the current year, the stocking pressure will be as good as last time? Will it be better than last time? What are the early trends, Dipali?
So I think let's just talk about, first of all, United States of America. It actually is 30% of the consumption of textiles in the world, right? And we saw that, the quarter one for United States expanded at 2%. Inflation was 5%, lowest in the 22 months. We see that, there will be that kind of an impact and that offtake that will happen in United States of America. I'll give you a small example. A young girl working in New York stays out of Charleston, 4 days in a week, and 3 days or 2 days she commutes to New York. This is the new era of the working age that's come into United States and all over, because working from home has become predominant. The costs of the cities has gone absolutely high. So America in short has become it's a resilient economy. So you will see that kind of a
So
thing
you're
come back.
expecting demand from America, but
Yeah.
there is this talk of recession, and the numbers actually have shown a drop, especially in textiles, 20%. So are you confident that in the coming months, like what you can see in the next quarter, July, August, September, do you think we can reverse this?
So Lata, I'm just going to say something. We are cautiously optimistic. I think looking at the world, which is so dynamic, in the way the trends are right now, we see, and we will take a trend. We have taken a position of being cautiously optimistic. To your question, I'll say the quarter one, quarter two are the time, years, the time of the years that we prepare for the holiday season. So you will see a slight uptrend here. So we will see how this export picture tends to pan out. But I can say that India is in a good position, and we tend to be cautiously optimistic here.
And you know about the festival season stocking, what, by October or earlier?
That already has started and begun because, we already planned the supply chain for textiles is 6 months ahead, right? So quarter one and quarter two is the time that we prepare for the holiday season. And the shipments happen in the quarter two for the preparation for their quarter four of the United States, right? Yeah.
And you can sense the orders coming this year.
At the moment, Lata, but yes, the world is moving towards a very dynamic trend. So I must say that, cautiously optimistic again.
Okay. Mr. Sahai, what about the other, the big contributor to exports is engineering exports. And that has shown about a 20% fall, if I'm not mistaken, Jan to May. Is there, no, I think not 20%, it's much less. It's about 6%. Do you think over there we would be seeing better? And chemicals, those are the manufacturing exports. How are we doing there?
No, in fact, I think these two commodities, they definitely depend on how the global economies and how the big countries are doing well. As of now, we are feeling that except for export to Europe, where the volumes of orders have come down, for the rest of the destination, we are not facing any challenge. For Europe, it's not that orders are not flowing, but the volumes have drastically reduced. We are hoping that from the third quarter of this calendar year, probably we will have better volume flowing from the Europe also. For apparel, for the engineering sectors, because some of the important components are the raw material kinds of thing, and with countries like China, just now they are recovering. Once that happens, probably the demands of raw materials will go up. We also have some kind of restriction in the past on exports of iron and steel also, which disrupted the market. It will take little time to gain the market. But overall, we feel that probably from the quarter from July to September, we will have better numbers. One positive of all these numbers is that even in the worst of the scenario, we are clocking around $35 billion exports in a month, which is much more than $30 billion, which we used to achieve in 2 years back. So overall exports are improving, and particularly in the electronic sector, we are doing extremely well. If you look into the electronic sector, still in the month of March, it clocked around $75 billion growth. Last year, we ended $25 billion. I'm looking at export of close to $40 billion and even much more for the electronic sector, because even in the mobile sector in particular, we have doubled our exports in last 2 months alone.
No, electronics exports is doing... Dr. Sahai, electronics exports is doing brilliantly well. It's 50% higher if you took Jan to May. That point is taken. But it is still only 5% of our total export basket. So you're confident that we would be doing 35 billion in the coming months as well?
No, absolutely. We will be much more than that. The short point which I'm making is that we are making very conscious effort to move to a technology-driven sector, because they are now accounting for 1/3 of the global imports. And our share in that segment is less than 1%. So we have a long way to go. We have definitely now increasing our exports in electronics and machinery. Probably very soon we will have the similar kind of exports happening in the electrical sectors also, because in the PLI scheme, we are covering all the segments. And once this production starts commencing in this segment, it's not only the mobile today, other electronic sectors have also done well. Very soon we will have similar trends coming in machinery and electricals also, and maybe drugs and pharma as well.
Okay, yeah, drugs and pharma is the other one that's done a steady number. It's not huge, but it is a good 6% higher. Those are the only two items where Jan to May, our exports are higher. Electronics, of course, up and away, and drugs and pharma about 5-6% higher. Dipali, final question to you. Are you saying that you've already started getting orders for the festive season? And if you have to compare from year ago levels, how much higher may that be?
Lata, last year was an aberration, and it'll not be right to say anything right now, but the offtake looks definitely better than last year for sure, because I think the freight, the energy basket, and the overall scenario was a little gloomy last year.
Okay. All right. Yeah, of course, we were in the shadow of a war, and therefore perhaps there wasn't so much of buying, and certainly traffic was disrupted. It may be much better. Maybe we should touch base with you all closer to time when the festival season is more underway and get a rain check. Thank you very much, Dr. Sahai and Dipali, for actually brightening up spirits that the goods exports, services exports are doing well. Goods exports are likely to at least continue with a 35 billion monthly run rate. We are wrapping up on Bazaar with a minor disappointment that we thought this 18,887 will hit in the first hour. It's just about 20 to 25 points away. Perhaps Chartbusters will have that luck. That's coming up for you after this.